Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Dearborn. He's the managing director on Nasdaq's Market Intelligence Desk. We're going to give you an update on the markets following the UK elections, US-China trade deal. We'll take a look at the 10-year Treasury, and we're going to wrap it up with Nasdaq 100 three-year performance. Chris, it's great to have you with me. As always, some uncertainty removed. Conservatives are back in power in the UK. Got the US-China trade deal, phase one light, it sounds like, on the table.
Happy Friday.
Thank you.
Absolutely. So this is the promise that we've been waiting for. Phase one has been a long time coming. It was promised yesterday in the tweets from Trump, and it was actually delivered this morning. Markets rallied significantly yesterday. All-time highs in Nasdaq Composite, Nasdaq 100, S&P 500. The Dow did very well, and the Russell made a 52-week high, but not quite an all-time high. Markets are on full force here. Traders are loving it because you have volume on the tape. 8 billion shares traded hands yesterday. We're on pace today to break the daily average, which is about 7 billion shares on the consolidated tape. All in all, good stuff. All
right, let's move along to our first chart here. We're taking a look at the 10-year Treasury, which Brian has been following all week on the desk.
Absolutely. So the interesting thing about the 10, you remember the Treasury yields move inverse to the price of the bonds, and bonds move inverse to stocks. Last night, the yield ticked higher in the overnight session to 1.95%, indicating that investors were selling bonds and buying stocks with the expectation of an all-in risk-on day today. That gave way a little bit this morning as a kind of sell the news event took place with that coming through. Plus, you had mixed retail sales, which kind of put a little bit of a dampener on things here. So the yield in the 10-year pulled back to about 1.83. The point of the chart here, if you look across it, it's broken down significantly, and it's a risk-off item. People are buying bonds because it's a little bit uncertain. Even though markets are making record highs, people are also putting the money to work at bonds because it's a give-and-take type of item. The bond itself, the yield, has made higher highs over the last 3 months, and it's continuing its upward slope. And with that, you're coming to an inflection point where the resistance level, which has been clearly defined at 1.97 to 1.90, is giving that resistance, which you can see by the arrows here on the far right. The inclining higher lows and that upward steep is coming to a point where the inflection is going to make a breakout one way or another. The inclination is that it's going to be a risk on with equities, and it's going to be risk off with bonds, and the people will see this yield tick above 2% for a potential breakout to the upside from there.
All right, let's move on to our next chart here.
Fantastic
Nasdaq
chart.
100 3 years since the election, which is so interesting, is that it's a very tech-heavy index, right?
Very tech-heavy.
You would expect that with Trump coming into in 2016, that perhaps manufacturing and industrial names would have taken off more, but the tech sector has enjoyed a fabulous run.
You're almost up 100% from the 2016 elections, and you made an all-time high yesterday. It's just showing you that investors are putting money to work in the large cap names despite the impact of tariffs over the potential tariff over the last couple of months. And what you're seeing here is a risk-on sentiment. Even though the markets are waffling back and forth, this has legs to go higher. The 100 and 200-day moving average are clearly below it. There's plenty of room for this index to run.
Right, and that's what I love about this index, because out of all the indexes that we follow, the major averages, companies within the Nasdaq 100 invest the most when it comes into R&D, and we see that translate into earnings, revenue, and dividend growth. So that's why it'd be great now that we have some sort of a resolution if we'll get more CapEx back into the system, because we certainly need that for future growth.
You have a clearly defined plan now, and people can put money back companies can put money back to work now that they know what their limitations are on the tax side of things here in the U.S.
All right, Chris, great to have you with me as always.
Thank you.
And thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.